February and March were record months for DekelOil. The company produced substantially more palm oil than even it expected in its latest quarter. Output from the 51% owned Ayunuan palm oil project in the Ivory Coast rose by 56% to 15,141 tonnes. Let's bring in Executive Director Lincoln Moore. Hello there, Lincoln. Look, you've beaten your own expectations. How did you do it?
Thanks, Julie. Nice to be here. Yeah, it was certainly a pleasant surprise for us. We obviously thought after a pretty successful year last year, we would kick on again this year, but the results are ahead of what we thought we would do for January, February, and March. We would have been thinking around 11 to 12,000 tonnes, but to be over 15,000 tonnes and 56% up like for like is a fantastic result. Really, it's just the second full year of production for our mills. So our position in the market is continuing to strengthen. I think the way that we deal with the smallholders, which provide the majority of our feedstock, is excellent. We're good payers to smallholders with excellent payment systems, and we have excellent logistics systems. And I think it's meaning that we're taking more market share, and we also think, really, in terms of the country as a whole, the country's going through significant economic growth. So there's more money spent on agriculture, and then of course onto palm oil. So we have more fruit growing in our region. So we're growing very, very well into that, and we have a lot of room still to grow. We're still only probably at about 65% of our mill's capacity, so plenty of organic growth to come.
So operationally and financially, what sort of shape is DekelOil in right now?
It's never really been in any better position, really. We had a strategy last year, which was to get the production to a point which we were profitable, which we have done last year. We'll be releasing our full year results the next few weeks, and really the aim this year was to continue to grow the business and take advantage of that profitability by first of all improving our debt position, our balance sheet, which you would have seen last two announcements. One last year, we wiped out the €5 million of debt, and then earlier, a couple of weeks or 3 weeks ago, we refinanced the majority of our senior debt down to 7% from 10.5%. Which really, I guess, gave investors indication that we're going very well, because you don't see banks take such a haircut if it's not a great deal for them. So we now expect 2016 to be a significant jump in profitability. We forecast by Cantor's have got numbers in the market. We're aiming to increase EBITDA this year over 80%. And we think that will translate to a much higher percentage gain in net profit after tax, because of course, as I mentioned, the interest costs that we have on our profit line have reduced substantially. So it's looking very, very good.
You mentioned a couple of the changes that have been taking place and the renewed investment in agriculture. What would you say, though, has been the main driver for price recovery?
The main driver of price recovery, really, there's two things. One, cyclically anyway, the reduction, which is out of Southeast Asia, is always at its lowest point early in the year, which is their low production period, so that pushes palm oil prices up. But it's been compounded this year by a very, very dry period experienced by Southeast Asia from sort of July through to the end of the year, the El Nino that we've talked about previously, which is reduced production in Southeast Asia and has seen palm oil prices continue to rise. I think we started the year not much more than $530 a tonne, and I think the actual international price at the moment is starting to get towards around $700 a tonne. I note in our results for the quarter, our prices are a little lower. The way that works, we have through the period February and March received a slightly lower price, but we've also paid less for the fruit as well. And the way that works is the pricing for the country, or what you sell within the country, is set based on the numbers from the previous month. So that's why that looks slightly lower, and that's why you will see very significant gains in the palm oil price that we get through April, which is mentioned in the announcement, and we expect that to further translate into May as well. I mean, the real benefit for us and for investors is we have stock on hand, considerable stock on hand, so we've effectively paid based on a March price for the fresh fruit bunch, and we're selling at the much higher April price for the crude palm oil. So we have mentioned our gross margins are higher than ever at the moment, and that will only add to that. Yeah. And then, of course, the kernel crushing plant as well. That's not including that. That's straight to almost straight profit line as well to the business, having the first 3 months of full production from the kernel crushing plant.
So the way you've tweaked your logistics arrangement, seems to be paying off. Look, you mentioned a relationship with the local fruit growers. You do need backing from them. What deals are in the pipeline there?
Really, I guess it's relationship driven. I mean, you can look at contract relationships with smallholders, but ultimately they're going to go where they get the best commercial deal. So we always have to be competitive in terms of the fresh fruit bunch prices with the other mills in the country. So it's really differentiating yourself in terms of your, as I mentioned earlier, that the payment processes, people feeling they're going to get paid on time and efficiently, and the logistics to be working simply and efficiently. And it's become clear. I mean, we always obviously hoped we would get more and more market share. It's come clear, particularly in February and March, the jump in production that those strategies that were put in place, even back to the back end of 2014 to 2015, are really, really delivering for us. And we expect to see substantial production growth this year from last year.
So that's your relationship with your suppliers. What about with your competitors? Because look, you're one of the largest independent palm oil producers in West Africa, but there's a lot of takeover talk. Who are you talking to?
At the moment, we're happy with the way our business is going. I think we still feel that the natural or the base business that we built has significant organic growth for us to deliver upon over the next 1 to 2 years. So it would need to be an enormous premium for us to even consider anything like that. I mean, we've I guess changing tack at the moment. We see ourselves as being in a position where we are in a very strong position to look at opportunities to buy other businesses over the next 1 to 2 years. We'll look at opportunities as our business stabilises and continues to grow. So the situation is slightly changed, where I guess we're at one stage early on our business cycle where we're a very relatively small player, but now we're becoming a relatively large player. And efficiencies in our business mean that we deliver much better profitability than perhaps some of our compatriots that have been operating for a much longer period of time and perhaps have larger overhead structures which are not suited to today's environment. So well positioned to grow organically and potentially acquire other businesses in time. And in the future, if one of the Asian companies is looking to move into West Africa, it can only be a benefit for us if we continue to grow ourselves.
Interesting stuff. We'll keep an eye out for that. Thanks ever so much for the update, Lincoln.
No, thank you very much. I appreciate talking to me.